So you guys can see right there from the article from the Financial Times that VanEck has been fined for its disclosure failures over an ETF promoted by Dave Portnoy. What? Yeah, so they didn't know that Dave was paid to promote Buzz ETF. Yeah, the sentiment ETF that was launched recently by VanEck. Here it is right here. Here's the price action so far for Buzz. Take a look. So what happened? SEC says fund overseers did not know about the agreement between Barstool Sports founder Dave Portnoy. Okay. Asset manager VanEck has agreed to pay the U.S. Securities and Exchange Commission nearly $2 million to settle charges that fund overseers were left in the dark about the decision to pay Dave Portnoy, the founder of Barstool Sports, to promote an exchange-traded fund that launched in March 2021. Question. Questionably, they do have billions of assets under management, VanEck. How did they not know that Dave was paid to push their ETF? Just some things for us to think about logically, because apparently it seems to me like VanEck went ahead to the SEC like, look, let's go ahead and settle this, because I don't want to place more information out on the street than what ought to be. So let's just go ahead and sell it for $2 million and let's move forward. Let's close it. The regulator's case comes as part of a broader crackdown on celebrities who promote or influence the price of financial products and cryptocurrencies. Portnoy used social media posts and interviews to back the VanEck social sentiment ETF, Buzz, saying that he invested $2 million in the fund after it debuted and promoting it on cable news on his launch day. There it is. This was from Fox Business, to where he was interviewed about Buzz. March 19th, 2021, Portnoy backed ETF Buzz hits $500 million in assets, the sixth fastest grower. There it is, backed by Dave Portnoy. He was paid to talk about this on Fox Business back in 2021. Here it is, 2024. And he just found out that this man was paid. So you didn't know that the reason why he was in front of the camera promoting Buzz was because he got paid to do it, and not necessarily because he was a believer in the ETF. Now you know, after the fact. But VanEck failed to tell the board in charge of supervising the ETF that Portnoy was being paid an undisclosed amount by Buzz Indexes, a subsidiary of Toronto-based hedge fund Periscope Capital. That keyword, undisclosed, is the part I think VanEck doesn't want the SEC to find out about, or anyone else. So they went ahead and just settled for $2 million. Because how much did Dave get paid to promote Buzz? Now, VanEck had a sliding scale licensing fee deal with Buzz that would become more lucrative for Buzz as the ETF attracted more assets. Wow, what does that mean? Explain that a little bit further. They had a sliding scale licensing fee deal with Buzz that would become more lucrative for Buzz as the ETF attracted more assets. You see how they really blasted that on this particular article from Fox Business? How it quickly gained $500 million in assets and it topped $503 million. VanEck capitalized off of that. Now, of course, the details have not been disclosed on how much this sliding scale licensing fee deal was with Buzz. But with $500 million in assets gained already and being the sixth largest grower in ETFs, I think it's kind of safe to think that Van Eck they got paid on that. Now, the SEC order does not name Portnoy, but describes the involvement of a well-known and controversial social media influencer who is known for commenting on sports, investing, and other topics. So they didn't blatantly come out in the case and say, the SEC didn't come out in the case and say, we're talking about Dave. Yeah, Dave Portnoy. They didn't say that. But apparently people familiar with the case confirmed that he was the one that they was talking about. He's the influencer. Portnoy's involvement and the details of the licensing agreement were not disclosed to the independent board members of Van Eck ETF Trusts when they approved the fund and its management fee of 0.75% for launch, the SEC said. The board only learned of the terms and Portnoy's involvement as a pitch man days prior to the launch. Yeah, so even big conglomerates, institutions get caught with their hand in the cookie jar. Now, $2 million, I mean, is that just a slap on the wrist? I don't know. Like I said, we don't know the true details of these agreements that was had between Dave and Buzz and Van Eck versus Buzz. Like, we don't know all of those details, which I think is the reason why they wanted to go ahead and just merely settle and just pay the $2 million, because sometimes that could be cheaper to go ahead and just pay the $2 million and move on. Okay. So now, according to the SEC, between December 2020 and June 2021, Van Eck misrepresented and failed to share material information with the board about controversies linked to Portnoy, as well as his involvement and compensation. There you go. Van Eck, which did not admit or deny the SEC's finding, declined to comment as they usually do, because that would just cause more problems, more chaos. So let's just say that you got us, let's pay the $2 million and let's clean our hands and move forward. Because if we don't, if we keep talking, then more and more information will come out because you talked. Portnoy and Buzz indexes did not immediately respond to requests for comment either. Of course, neither were named as defendants in the SEC action, so they rightfully could say, yeah, we don't have nothing to say about it. The Buzz ETF currently has $76 million in assets. That is the biggest problem right there, I see. They use Dave as a pitch man to go ahead and promote Buzz when it first was launched. And you guys remember that number, right? That Fox Business really wanted us to see. $500 million in assets. What is it now? According to the Financial Times, it's down to 76. Man, what's going on? Do they need another pitch man to come and promote Buzz to get more money into the fund? It looked like it. Andrew Dean, he is the co-chief of the SEC Enforcement Division Asset Management Unit, said in a statement, quote, Van Eck Associates disclosure failures concerning this high-profile fund launch limited the board's ability to consider the economic impact of the licensing arrangement and the involvement of a prominent social media influencer as it evaluated Van Eck Associates advisory contract for the fund. So, that's it. Old Dave got paid to promote Buzz. Didn't know nothing about it. You guys maybe saw the article. You guys maybe saw a couple of tweets that he did and said, let me go ahead and get in on this, since Dave placed $2 million of his own money into Buzz. This was even from the NYSE. Dave Portnoy right there in the back waving at you. Yeah, right there as it's listed on the exchange, New York Stock Exchange. Look at Dave all happy. Back in March 4th, 2021. He's happy because he got paid to do that. to look in front of the camera and act like he's really involved in the buzz. But he was promoted to do that. Ahead of the fund's launch, Portnoy, who says his face and reputation is behind the ETF, explained the companies in the fund don't have to be the meme stocks that investors may associate with the Reddit community. Oh man, his face and reputation. It looked like his money was there. It looked like he was paid to promote. That's why his face and his reputation was involved in the Buzz ETF promotion. You didn't know that though, did you? See, when this came out in 2021, you didn't know that. You legitimately thought that he was putting his reputation on the line for this ETF, not even knowing that he was paid. That's why it's very important for these companies to disclose that the people that they have representing their products has either been paid or not. Because imagine the following that Dave has. And that following, I would say maybe a couple of people put money into the fund because he was involved. His face and his reputation is behind it. It's more of a long-term view. And I'm quoting what Dave is saying. It's more of a long-term view, and it doesn't have to be a Reddit stock, so to speak. It can be talked about anywhere, he said during an interview on Fox Business. That includes Twitter or any place on social media for that matter. Oh, really? It's a long-term view. You see that? Long-term. Trying to make sure that you guys don't leave the fund once he leaves. Because now, as we saw, that $503 million that was in the fund is now dwindled down to 76 million. There you go. It looked like it's not that long term because it initially was launched in 2021. Here it is 3 years later. Give me your thoughts. Make sure you maintain the profitability. And as always, trade different.